Welcome to episode 2 of the Fish Fund's Lockdown Lowdown, where we explore what's going on in financial markets through the coronavirus crisis. It has been a remarkable past 3 days in global financial markets. The US share market is up over 17%, the best 3-day return since the 1930s, a phenomenal move up in share prices. So what's been going on in markets and what's our take on it? Well, we've been looking for 3 things to help us plot our course through the coronavirus crisis. The first of those is monetary policy, and what are monetary authorities around the world doing to support businesses and communities through the crisis. What we're seeing there is a phenomenal response from central banks. They're not just throwing the kitchen sink at this, they're frankly throwing the entire kitchen and the whole house to support financial markets. What does that involve? Well, it's involved cutting interest rates in almost every country around the world. It's involved governments like New Zealand, like Australia, and like the US Federal Reserve buying government bonds. But in fact, in many cases, they're going a step further than that. They're buying government bonds, mortgage-backed securities, and in fact, in the US, for the first time ever, buying back corporate bonds. All of those things improve liquidity, they improve access to capital, they make it easier for businesses to manage through this very difficult environment. So definitely a big tick on the roadmap to success via what the monetary authorities are doing. The second thing we're looking for is a similar response from governments, and that's fiscal policy. That's governments spending money in the community to help us get through the next few months. What we're seeing there is not as big a response, but still a very large response. The poster child of that, of course, is the $2 trillion package announced by the US government overnight. What are they doing there? Well, they're paying money to almost every American to help out for the next couple of months. They're improving unemployment insurance for those people who are unfortunate enough to lose their jobs over this period, and they're supporting businesses. They're doing 2 things there. First, for smaller businesses that keep employing people, they're arranging for payments for those firms, but they've also got larger payments and larger support packages for those big businesses that are very distressed, and just think of things like the airline industry or the hotel industry. So significant response there. In other jurisdictions, we're not seeing quite as big a fiscal response, so we'd give this a kind of half a tick. So full tick for monetary policy, half a tick for fiscal policy response for now. The third thing we've been looking for is what's going on with coronavirus itself. Now, we've got to be careful here. We are not virologists, we're not experts in this area, but we're looking very closely at what the measures that are being put in place, the effect that that's having on disease or virus progression around the world. And the news there is tentatively good. For those countries, and New Zealand's now in this camp, who've adopted very stringent lockdown policies, who've adopted strict testing policies and have really tried to get ahead of the curve, we are seeing that the number of cases that those countries have experienced have actually fallen down. The curve, to use the current phrase, has been very much flattened, or in some cases really turning downwards. That's a reassuring sign, but it's still, in my view, a tentative one. So for us, we think we've got our hands around what needs to be done. Not enough of it's being done around the world yet, but we think the right steps are being made. So again, maybe a quarter of a tick, half a tick here. How does that all settle out? Well, we don't think all the steps are in place or all the boxes are ticked to support a really strong rally in global risk assets right now. We think we're getting there. We think the response is in the right direction, but we believe that a bit of patience is still required by all of us as investors. Within our portfolios, we're adopting a position of cautious optimism, looking at those opportunities for companies that we think will emerge from this a lot stronger than they were, being prepared to deploy capital into those, but doing it in a measured and smart way. I think doing that well will see us in very good stead on the other side of this crisis. Talk to you next time. Thank you.